Welcome back to the Deep Dive. I want to start today with a bit of a contradiction, or maybe it's a magic trick.
Okay.
Imagine the current retail world.
Mm.
You've got consumers who are, stressed out. They're looking for bargains, waiting for that big red 50% off
For
sticker.
the most part, yeah. It's a very promotional environment out there.
Exactly. So imagine a brand that's nearly 60 years old.
Mm.
A brand that decides, you know what? We're going to do the opposite.
Yeah.
We are going to raise our prices
Yeah.
significantly.
Right.
We're going to refuse to put things on sale,
Yeah.
and we're going to sell even more because of it. It sounds impossible, doesn't it?
It sounds like a recipe for bankruptcy in this climate, honestly. But that is exactly what we are seeing in the source material we have in front of us today.
It really is. We are diving into the Ralph Lauren Q3 2026 earnings report, which just dropped today, February 5th. And I have to say, reading through this transcript, feels like they aren't even playing the same game as everyone else.
They certainly aren't playing by the standard retail playbook. Our mission for this deep dive is to unpack exactly how they're pulling this off.
So what are we working with?
We've got the earnings call transcript with the CEO, Patrice Louvet, and CFO, Justin Pacici, the official press release, and some supplemental financial data.
And the strategy seems to be, what, cinematic storytelling?
Yeah.
AI assistance? It's a lot.
It is. And treating clothing lines like movie productions.
Okay, so before we get into the hard numbers, and I know you have a lot to say about margins and metrics, I want to talk about this vibe shift. Because usually when I read an earnings report, it's all spreadsheets and efficiency talk.
Yeah.
But the CEO, Patrice Louvet, he didn't sound like a CEO. He sounded like, well, an auteur.
That's the Scorsese comparison you're alluding to. It's a fascinating pivot in their corporate language.
Right.
Louvet essentially argued that Ralph Lauren, the man, isn't really a fashion designer in the traditional sense. He compared him to a movie director like Martin Scorsese or Steven Spielberg.
Okay, but playing devil's advocate here, that sounds like total marketing fluff, doesn't it? We aren't a store, we're a universe.
It does.
Every heritage brand says something like that to justify charging, $100 for a T-shirt. Is there actually any substance to that?
It does sound like fluff, I agree, until you see how they actually executed it this quarter. That movie director mindset isn't just a slogan, it's operational.
How so?
Take the holiday season, which is what this Q3 report covers. Most retailers, they just put sweaters on mannequins, hung up some tinsel. Ralph Lauren built sets?
Sets. Like movie sets.
Effectively, yes. In Tokyo, for example, they didn't just open a pop-up shop, they built a literal Christmas tree farm. In London, it wasn't a shop, it was a winter wonderland.
So you walk in, you get the smell of Ralph's coffee, you see an artist hand-painting denim.
Exactly. You're not just buying a commodity. You aren't just buying a jacket to keep you warm.
You're buying a souvenir from the movie set you just walked through.
That's it. And think about the psychology of that. You don't haggle over the price of a souvenir. You pay for the memory. And that experience lets them charge a premium that a standard rack of clothes just can't command.
That makes a lot of sense. But building movie sets is expensive. And it requires a constant stream of new movies.
Correct. You can't just leave the Christmas tree farm up all year. And this leads us to the second pillar of their strategy, which they call rolling thunder.
Rolling thunder. That sounds incredibly aggressive for a brand known for, like, cable knit sweaters.
It's meant to be. I mean, you have to remember how fashion used to work. It was very cyclical. You'd blow your entire marketing budget on the September issue of Vogue.
Right, the famous September issue. And then you'd go quiet until March.
Exactly, the old seasonal model. But in the TikTok era, silence is death. You cannot disappear for 5 months. So rolling thunder is their term for an always-on offense.
So they're just manufacturing cultural moments every few weeks.
Constantly, to keep the brand top of mind.
Which explains the frantic schedule I feel like I'm seeing. Every time I open my newsfeed, there they are. Lando Norris wins the Formula One Drivers' Championship, boom. Ralph Lauren. The Milan Cortina Winter Olympics opening ceremony is literally tomorrow, February 6th.
And Team USA is decked out in RL. It's a constant drumbeat. It's not just the Olympics. They're doing these very Ralph documentary events. In Asia, they have the Australian Open partnership. It's relentless.
But again, I have to put on my skeptical hat.
Yeah.
This has to be costing them a fortune.
It is.
You don't sponsor F1 champions and the entire Olympic team for free.
You're absolutely right. And the CFO, Justin Pacici, was very open about this. They cranked their marketing spend up to between 7.5 and 8% of sales. That is a heavy burn rate.
So they're betting the farm that this marketing blitz pays off.
Essentially, the argument is that the ROI, the return on investment, justifies the cash burn because it drives full price demand. And that phrase, full price demand, that's the key to all of this.
Okay, let's unpack that, because it brings us to the headline numbers. Did all this Rolling Thunder and Winter Wonderland stuff, did it work?
It did. They beat expectations on both top and bottom lines. Revenue is up 10% in constant currency, hitting $2.4 billion.
Okay.
But the number that really jumped out, and this connects back to your magic trick comment, is that they added 2.1 million new consumers.
In 1 quarter.
In just 1 quarter.
That is a staggering number, 2.1 million new people.
And these aren't just people buying a pair of socks, they're high-value customers. And this success brings us to the most controversial part of the report, the pricing.
Yes, the AUR. I saw this acronym all over the transcript.
AUR, average unit retail. In plain English, it's the average price a customer actually pays for a single item.
So not the price on the tag, but what hits the credit card after all the coupons and discounts.
Precisely. And in retail, getting this number to go up is incredibly hard. Usually, to sell more volume, you have to lower the price.
Right.
Ralph Lauren reported that their AUR was up 18% this quarter.
Okay, hang on. 18%. As a shareholder, that sounds great. But as a shopper, that sounds painful.
It does.
Are you telling me the exact same polo shirt I bought last year is now 18% more expensive? Because that feels like price gouging.
That's the nuance. It's not necessarily that the same shirt is 18% more expensive. It's that they're manipulating the basket.
Okay.
First, they are selling higher-tier items. They aren't just pushing basic cotton polos. They are selling these candy shop color puffers, cable knit bombers, high-end handbags.
So the mix is shifting to more expensive stuff.
Right. But the bigger factor, and this is where your wallet feels it, is a strategic pullback on discounts. They deliberately reduced promotions, specifically in their outlet stores and in Europe. They looked at the holiday season, saw the demand was strong, and just said, we don't need to put a 30% off sign in the window.
So the sale rack is empty.
Precisely. They essentially looked at the consumer and said, if you want this, you pay full price.
That takes some serious nerve. Especially during the holidays when every other store is screaming, sale, sale, sale.
And that's what makes this quarter so unique. They did the opposite. They played hard to get, and the customers chased them.
And they didn't scare people away.
No. They reported that 50% of their customers stay with the brand for over 10 years. That high retention rate gave them the confidence to hold the line on price.
So they were banking on loyalty. But I want to talk about where this is working, because I noticed something in the regional breakdown that doesn't seem to match the global economic news.
You're looking at Asia.
I am. Specifically China. I read the headlines. The Chinese economy is wobbly right now. Youth unemployment, real estate crisis, luxury giants have been reporting slowdowns there. So how on earth is Ralph Lauren growing China revenue by more than 30%?
It's a bit of a paradox, isn't it? But I think it comes down to the psychology of the consumer during a downturn. When people feel rich, when the economy is booming, they often buy what we call loud luxury.
Big gold logos, flashy streetwear. Look at me, I've made it.
Exactly. But when things get tough, when there's uncertainty, ostentation becomes tacky or even dangerous.
So you pivot to quiet luxury.
You pivot to old money,
Yeah?
to heritage. Ralph Lauren isn't flashy, it's classic. It represents stability. And in a volatile market, wearing a Ralph Lauren cable knit sweater signals, I have status, but I'm stable, I'm safe.
That's fascinating. So the boring, preppy look is actually a safety blanket.
In a way, yes. And that aesthetic is resonating deeply with the Chinese middle and upper class right now because of the economic uncertainty, not in spite of it.
So they just nailed the execution on that.
They did. They had a standout performance on Singles' Day. That's the big November 11th shopping holiday in China. While other brands were struggling, Ralph Lauren was capitalizing on this desire for stable, classic aesthetics.
And what about the rest of the world? Are we seeing that same flight to safety in the U.S. and Europe?
To a lesser extent, but the growth is there. North America is solid, up 8%. And importantly, the wholesale channel selling to department stores returned to growth.
Which has been a trouble spot for a long time.
It has. Europe was up 4%, which is decent given the tough economic environment there.
But they're being careful with department stores, right? I noticed they specifically called out Saks.
Yes, this is a crucial detail. The department store landscape is consolidating. Saks is going through some major changes, and management explicitly said they have minimal exposure to Saks now.
So they saw trouble coming and got their stuff out of there.
Essentially. They've been proactively pulling back inventory. They want to prioritize their own direct-to-consumer channels, their stores, their website, where they control the price and the experience.
Smart. Control the narrative, control the price.
Yeah.
Now, I want to pivot to something that surprised me. When I think Ralph Lauren, I think heritage, tweed, horses. I only cutting-edge tech.
Right.
But they spent a surprising amount of time on this call talking about AI.
This is the Ask Ralph tool.
Ask Ralph. It feels like a friendly uncle, but it's an AI-powered shopping assistant they launched back in September. Is this just a gimmick? A chatbot with a fancy name?
It's easy to dismiss it as a gimmick, but the usage data suggests otherwise. Styling and outfit discovery account for more than 50% of the engagement with the bot.
So people aren't just asking, do you have this in a medium?
No, they're asking, what should I wear to a winter wedding? Or how do I style this blazer?
Okay, that's convenient for the user. But let's be cynical for a second. What does Ralph Lauren get out of this, aside from selling me a suit?
They get the holy grail of retail, context. Think about how we usually shop online. You type blue blazer size medium into a search bar. The store knows you want a blue blazer.
Right.
But they don't know why. They don't know if it's for a job interview, a date, a yacht party. When you talk to Ask Ralph, you say, I need an outfit for a summer wedding in Italy.
Suddenly they know my location, my social status, my travel plans, my aesthetic preference.
Exactly. It turns search data into intent data. That is wildly valuable for forecasting. If 10,000 people are asking about linen suits in February for weddings in May, they know exactly what to order.
So Ask Ralph is basically a data mining operation dressed up as a stylist.
In the most brilliant way possible, yes. And they're combining this with a move onto TikTok Shop.
I saw that first luxury brand with an always-on presence there in the U.S.
It's a clear play for the next generation. They are specifically curating assortments for younger males on that platform.
A very smart way to refresh the customer base.
Hook them on TikTok with a CAC or a t-shirt, and 10 years later, they're buying the suit.
So we've got the movie magic, the price hikes working, the AI gathering data. It sounds like a perfect quarter, but we have to look at the clouds on the horizon.
We do.
Because despite the earnings beat, the stock actually slid a little bit. So why the long face Wall Street?
It's the reality check. It's not all sunshine and cashmere. The big scary word here is tariffs.
Ah, yes. The trade environment.
Ralph Lauren sources a lot of product globally. U.S. tariffs are starting to flow through to their cost of goods sold, and management was very blunt about this. They explicitly stated that in the next quarter, Q4 operating margins are going to contract.
By how much?
By 80 to 120 basis points.
Okay, for those of us who don't speak CFO, what does 80 to 120 basis points actually mean?
It means their profit margin is shrinking by about 1%. Which might sound small, but when you're dealing with billions of dollars, 1% is a huge amount of money vanishing into taxes at the border.
Ouch. So they're selling more and for a higher price, but keeping less of the profit on each item.
Exactly. They called it a meaningful headwind that is going to last through the first half of fiscal year 2027.
So the next 6 to 9 months are going to be more expensive for them to do business.
Correct. They view it as a transitional pain. They're working on mitigating it, but in the short term, it's going to hurt the bottom line.
And it wasn't just tariffs, right? They mentioned freight costs, too.
They did. Shipping costs are creeping back up. Red Sea disruptions are still a factor. Interestingly, the cost of cotton was actually down, which helped them, but the cost to move that cotton across the ocean is getting pricier.
So it's a high wire act. On one side, booming demand and high prices. On the other, the government takes a bigger cut and ships have to take longer routes.
That's the balancing act. But I think what gives investors some comfort, even with the stock slide, is that the brand heat is strong enough to weather it.
Right.
If demand were falling, A&D costs were rising, that would be a disaster. But because demand is high, they have room to maneuver.
So what does this all mean for us, for the listener who might just be looking for a nice sweater or maybe watching the stock market?
I think the big takeaway is a lesson in brand power. In a volatile economy, there are really only two ways to survive. You either race to the bottom and sell commodities as cheap as possible.
Think fast fashion.
Or you convince the world that your product is a dream worth paying full price for.
And Ralph Lauren has clearly picked the dream lane.
They have. They're proving that even when consumers are stressed, they will pay for a feeling. They will pay to be part of that Scorsese movie.
It's impressive. They've managed to be 60 years old and brand new at the same time. But before we go, I want to leave listeners with a thought about that AI we discussed.
Go on.
We talked about Ask Ralph and how convenient it is. But you mentioned something about the future of shopping agents.
Yes. Ralph Lauren is banking on their brand being strong enough that you will go to their site and ask their bot for advice.
Okay.
But imagine a future, maybe a few years from now, where you don't even shop. You have a personal AI agent on your phone, and you just say, I need an outfit for a job interview.
Oh, that's a wild thought. So I don't go to ralphlauren.com, I just tell my phone what I need.
Exactly. And if that happens, does the AI care about the cinematic storytelling? Does it care about the Christmas tree farm in Tokyo? Or does it just look at data points, fabric quality, price, shipping speed?
That is slightly terrifying for a brand like this.
Yeah.
If we move to a world of algorithmic shopping, can a brand built on vibes and storytelling survive against the cold, hard logic of an AI?
That is the multi-billion-dollar question. Ralph Lauren is betting on the human connection. We'll see if the algorithms agree.
Well, while we still have our human agency, I might go check out those Olympic uniforms. The opening ceremony is tomorrow, so keep an eye out for that rolling thunder in action. Thanks for listening to this deep dive.
Goodbye, everyone.